Mr. Anil Grandi, founder and CEO of AG FinTax. Mr. Anil has over 20 years of experience in finance and has worked with companies like Amazon, Starbucks, and PwC. Mr. Anil has received the 2025 Congressional Award at Capitol Hill and also several business excellence recognitions. Mr. Anil has extensively experience in tax planning, financial strategy, and helping small business owners and real estate investors on helping them with the tax systems. Through his work, he has helped many clients understand tax laws, avoid common mistakes, and make smaller financial decisions. Today, he'll be sharing his valuable insights on tax strategies, planning for individuals, small businesses, and real estate owners. Please join me. Welcome, Mr. Anil Grandi.
Thank you. Start your sir. Yeah, thank you. Thanks, Anup, and thanks,
Yes,
Praveen, also. Yeah. Kavita garu and Sudhakar garu, thank you very much for this opportunity. So, I have been associated with TTA for quite some time. For the last few years, I have been associated. I'm so glad and honored to be associated and partnered to share my knowledge with the community. And thank you very much to the leadership team for a consistent efforts you are doing to share the knowledge with the community. And today, we are going to talk about one very important topic, taxes. We all need to file taxes. The due dates are coming up. March 16th is the deadline for business returns and April 15th is the deadline for the individual tax returns. So this is the time where everyone thinks about taxes, thinks about money, because they might need to pay a lot of taxes or they might need to gather all the documents of their investments and need to start working on tax filing. So this is the right time for me where I can share some knowledge, some insights, what you can do before filing taxes. And for the last year, the opportunity to save taxes is a bit limited. But this year, for the year 2026, we are in the beginning of the year. Definitely, I see that a lot of opportunity to save taxes. At the end, for every dollar we are earning, we are paying 30-40 cents in taxes. Rather than paying like that, there are legally many ways are available where you can invest or where you can keep the money with you and invest that money to build your wealth. So today we will focus a bit more on small businesses and real estates. So we have done a lot of sessions on individuals. So today our focus is slightly different, is more focused on small business owners, self-employed, and also real estate investors. So I'm sharing my screen. So if anyone has any questions, feel free to post your questions in the chat box. And at the end of the session, I will try to answer all the questions. Okay. So all our objective is today we bring this knowledge and expertise to the community so that they can keep the money what they're earning legally. From the money what you are earning, if you can keep it and you can invest it and you can build your wealth. We all are working hard to build wealth, not to pay a lot of taxes or not to just take care of our family expenses. We all need to work. We need to work hard to build wealth. So in that exercise, when you want to build wealth, so first you want to earn and save the money, invest the money, and to build the wealth. In this exercise, taxes plays a key role. So today I am sharing my knowledge with the community. Sometimes it may not be applicable. So I strongly recommend you to work with an accountant or CPA to ensure those strategies are applicable for you, or at least schedule a meeting with us. You can see the barcodes in the bottom of the screen. You can also see the contact numbers on the back end of my background, in the virtual background. Talk to us. Ensure those are applicable for you before you do any mistakes. That's what our intention. And if you are hearing me for the first time, and this is a very brief about me, Anup already covered at high level, but for me at very high level, my name is Anil Grandi. I have 20 plus years of experience in the core tax finance fields. Earlier, I have been working with, I have been serving as a Forbes Finance Council member for the last few years. and I have received many business excellence awards. Almost every year I receive a lot of awards, and we are based out of Dallas, but we have licenses to do the business in all 50 states of America. We have clients in all the states, many states, including in Arizona. Also, we have even small office, and also we have a presence there. And apart from the tax filing, so apart from me, we have a very big team of 100+ employees with a team of CPAs, chartered accountants, and also licensed financial advisors. And if you are looking for filing a taxes, this is the season. Definitely, we would love to help our clients and on the tax filing. We are unique on filing taxes because we offer a basic tax planning is included for the individual. For the business owners, a free tax assessment is also included when we file your taxes. And we are, because we are a tax planners, we always see that what more value we can bring to the clients throughout the year. Apart from the taxes, we do also do accounting, bookkeeping, tax planning, and also audits, SOC audit, or review of financials, or even mortgage loans. Like right now, the interest rates are less than 6%. So if you're still paying more than 6% for your primary home or for your investment homes, definitely it's time for to refinance it. You can just reach out to us. We are happy to give a free quote for you, and with at zero cost we can refinance for you. And also, if you're looking to set up an entities, LLCs, S corporation, C corporation, conversions, we are happy to do it. And if you're looking for any company valuations, we can help. On top of everything, I am also a chartered accountant from India. I am an expert on moving the money, repatriation of funds between US and India. So if you need any help on any of those consultation guidance, feel free to reach out. So, but why taxes are very important? Because as I mentioned, for every dollar we earn, we are paying 30 to 40% in taxes. So if we can keep the money what we earn, so definitely we can invest those money in many other options, and we can build the wealth much faster. So, and when you people say that really, are there any great tax plannings can be done? Tax planning is legally possible. If you think that tax planning is not possible, definitely I want to refer big people who build the wealth much faster. If you are serious on building your wealth, you need to focus proactively on planning. If you can plan it better, definitely you can save the money in taxes. Instead of paying 30% share, you can bring it down, or a lot of times you can even go for a zero taxes also. And all this can be done only with a team. You might be very smart, you can do a lot of activities on your own, but without your team you cannot go long. Unless you are even you are in the finance professional, even though you are a CPA, still tax planning is specialized area. So you need to build your team who can help you in building your wealth. So uh, Kavita garu, can put everyone on mute possible? Yeah, thank you. So, okay. So team is very important. And if you think that no, every year I have to pay taxes, I have to pay taxes, that's what I am paying taxes. I am not opposed to pay taxes. Everyone has to pay taxes, but legally there are many ways where you can optimize it, where you can bring down your tax liability. That's what I wanted to implement it. So if we can do, if you think that oh anyway I have to pay taxes, or every month I am paying through my W2, so I don't need to pay, I don't pay a lot of taxes at the time of filing taxes, those are not the right signs, not right signs. If you are paying a lot of taxes, it means you are not only giving the cash out, you are missing a wealth building opportunity. Like imagine in the last few years, if you have been paying hundreds of thousands of dollars to taxes to IRS, if you can keep the money with you, imagine how much wealth you would have built by this time. So a planning, if you miss the tax planning, you are missing a wealth building opportunity. So tax planning is a year-round mindset. Don't think that it's only at the end of this year. You have to think about taxes throughout the year. That is why you can build wealth. So and also you might be thinking you are working with a great accountant or CPA. He is doing it very cheaper price. Doesn't matter. Is your an accountant or CPA bringing value is what very important. and so definitely you need to consider that. And whatever money we earn, we need to pay taxes, and it's a progressive tax system we have. The more income we have, the more taxes we need to pay, and the more tax planning opportunities also. If you are having very lesser income, the opportunity taxes is less. But if you have more income, then definitely more opportunities we have. And we have so many case studies, but at very high level, if you look into that, what are the different types of incomes we have? We have a standard regular W2 income where we need to pay social security taxes of 15.3% employer and employee shares. And if you are making a 1099 income, then entire 15.3% of the social security taxes you need to pay from your pocket. And if you are having any passive income or investment income, dividend income, capital gains, rental income, most of the scenarios, tax rates are 0 to 15-20%. Interest and dividend incomes. And real estate income, any real estate income you get, including your rental incomes, or if you are, then it's considered as a passive, and lot of tax planning strategies also available. If we have more than 2 real estate properties, lot of tax planning opportunities are available. If you are not optimizing it, definitely you need to sit work on it. If you are having more than 5 residential homes as investment homes, a lot more opportunities are available. So definitely I wanted to consider what are the options are there, because otherwise you just end up paying a lot of taxes. And if you are an individual, we have 2 options to file taxes: standard return, itemized return. If you are filing a standard return, we have a standard flat tax deduction up to $15,000. You don't need to pay taxes. After that, you just pay taxes. But if you go for itemized, you can claim more expenses, more deductions. So it means if you are eligible under this, then you can claim your home mortgage interest. You can claim your state taxes. Like example, in Arizona, we are paying a state taxes. Those taxes can be taxed deducted again. Property taxes can be deducted up to $40,000. You can claim it as a SALT, that is state and local taxes. And also medical and dental expenses, if it's a major expenses, then we can claim. Charitable contributions, if you are doing some charitable contributions to any 501c organization, or if you are doing some donations to TTA, if you like example, a convention is coming up, if you are doing any donations to TTA, all these donations whatever doing are covered under 501c, as long as they have the 501c certificate active. So those all expenses, or those all are donations also tax deductible. And in the last 1 year, one big beautiful bill got introduced by our new President Trump. There are so many changes are there, but if you look at very high level, I can cover at a very high level considering shortage of the time. Our tax rates are frozen. Technically, our tax rates are supposed to be increased from next year onwards, but now because of the new one big beautiful bill, they are not increasing the taxes. And higher standard deductions. Earlier, it used to be lesser standard deductions, but now because of one big beautiful bill, the standard deductions got increased. And QBA, qualified business income deduction. If you are having any business, if it's a pass-through, that means LLC, S corporation, or partnership, or sole proprietor. If it's a pass-through business, you don't need to pay taxes of up to 20% of your income from your business. There are some threshold limits are there, but it is supposed to be vanished from next year onwards. But with this new one big beautiful bill, they made it permanent. So every year you can enjoy 20%. You don't need to pay taxes on your business income. So as long as you come under that criteria. 100% depreciation, a great tax provision. If you are buying any asset, it could be a real estate or any other property or any other asset. If the lifetime of the asset is less than 20 years, 100% of value of the asset is depreciated in the year 1. A great tax planning tool if you are active in the real estate. And estate tax exemptions, at some point of time we need to transfer our assets to the next generation legally. So then we need to pay estate taxes. Earlier it is supposed to become $6 million. That means if you are transferring more than $6 million of assets to your next generation after your dismissal, you are supposed to pay 40% in taxes. But now they increase it to $15 million per individual, so per parent. So now estate tax limits have gone up. These all are great provisions become permanent through one big beautiful bill. Apart from that, right now there are no taxes on the tips. If you are working in a restaurant, if you are working in a hospital, if you get any tips, you don't need to pay taxes income up to 200 up to $25,000. No taxes on overtime. If you get any overtime income, if you're working late nights, if you're working weekends, if you're getting any overtime income, then you don't need to pay taxes on overtime income. And a great new provision, car loan interest deduction. If you are buying any car, even though you don't have the business, you can claim up to $10,000 interest payment in your tax return if the car is assembled in US. And if you are a senior citizen with 65 years of age, you can get an additional $6,000 extra deduction of bonus depreciation, extra bonus deduction you are going to get as a standard deduction. And also child tax credit. If you have kids, you can get a $2,200 tax credit for every kid if the kids are under 17 years. If you have 3 kids, $6,600. So these all provisions, there are a lot of changes have taken place this year. So when you file taxes, it's very important you know to some extent, and you need to ensure you are working with the right accountant who can understand all this, and you can get the highest refunds if possible. And a great new account got introduced called Trump account. A Trump account is we can open a Trump account for all our kids if our kids are under 18 years. And we can contribute up to $5,000 into the Trump account, and it is like an IRA account. So every year you can contribute 5,000, 5,000, 5,000. Money goes tax deferred. But after kids attain 18 years, they can use this money for their education, for their buying a new house, new primary home, or even start a business. To get this account, you need to submit a request along with your tax return. Very, very important. If you are filing your taxes now, you need to submit this form and ask for it. So then only IRS will get you, then IRS will send you, will allow you to open a new account for your kids. So when you are filing your taxes, this is a very important step. And because we are a bit focusing more on the business owners, next few slides I would like to focus on what are the common mistakes our business owners does. The first one is mixing personal and business finances. Using a business account for personal expenses and using a personal account for the business expenses. You are commingling. If you are doing this, there is a big risk you are carrying it. It's called piercing the veil. That means if anyone files, people think I am under LLC. If anyone files a case, personally I am not responsible. But if the track record shows that your personal and business expenses are together, then court says it is not a separate, your LLC or C Corp, S Corp is not a separate entity, because you are using that money for your personal expenses also, so that you both are work together and you are personally liable to take care of any claims on your company. So always maintain a separate books of accounts. Don't commingle your business and personal expenses. If you need some money, if you don't have the money, transfer your business account balances to your personal account and use the money from the personal. Like example, you want to go for some shopping. Don't spend the money from your business account. Take the money to your personal and spend it. Or when you have some money in your personal account, don't use this for the business purpose. You need to transfer the money to the business account, and from the business debit card or business credit card, use it to take care of business finances. So always maintain it separate. Otherwise, there is a very high Otherwise, there is a very high risk of audits at the personal and the business. We strongly recommend you to split both business and personal all the time. Then, other mistakes what people do when you are a business owner, missing some deductions. When you have a business income, even though you are a self-employed, even you are a real estate agent, you are a financial advisor, you are running a small restaurant, or you are running a small grocery store, or you are running a kitchen at your home, or you are a photographer, or whatever self-employed, or you are running an IT company for running a small business, or you are running a proper business, or you are running a corporate. If you are a business owner, these all lot of expenses can be deducted against your income, so that your net taxable income will come down. The more deductions you claim legally, the tax liability will come down. Like example, home office expenses. As long as you are working from home and you have an exclusive and dedicated place at your home, you are legally authorized to claim home office expenses. Vehicle and mileage. So if you are using the vehicle, your car, for the business purpose, you can claim all expenses at actual, or you can claim based on the miles. For every mile you get some 70 cents, as long as as a deduction, as long as you maintain a logbook. Health insurance premiums. As a business owner, if you are paying health insurance premiums from your pocket, and if it's a post tax, definitely it can be claimed as a deduction in your tax return. It is very common when you are a self-employed, you need to buy the health insurance policies from the marketplace. If that is the case, you can claim those expenses as a deduction. And education and professional development. When you run a business, you need to continuously improve your knowledge. Continuously, you need to be learning new things. Continuously update with the latest changes in your profession. You might need to attend some course, you need to take some course, certifications, you need to attend some conferences, you need to travel, you need to subscribe for subscriptions, you need to buy some books, professional courses. All expenses are tax deductible as long as you can show a business need and a proper supporting documentation. If you don't claim all this, what happens? You're paying taxes, more taxes. So there are opportunities are sitting, you need to claim it. Then number 3, wrong entity structuring. It is very common, many companies do a wrong entity. We have different types of entities: sole proprietor, S corporation, C corporation, LLC, partnership. But people are not familiar what to use, when to use. When you start the business, generally what we do, we just start up an LLC, and we continue to build that LLC as a business as the business grows. But as the business grows, you might need to convert that to the S corporation, or you might need to convert to the C corporation. Have you done all this analysis or not? Or you're just filing your taxes as an S corporation or just as an LLC? We have to do all this analysis. If you don't do this proper analysis, you might be paying a lot of social security taxes, or otherwise higher income taxes also you might be paying it. You need to analyze it. When you started the business as a simple LLC, but later you grown. As you've grown, you need to do a lot more analysis. You need to have a stronger team who can help you in guiding on all these advisors. Then, if you are a business owner, you need to pay taxes, estimated taxes every quarter. If you are paying your taxes only at the time of filing your taxes, definitely you are missing opportunities. You are leaving a lot of money on the table as interest and penalties. As a business owner, you have an obligation to pay taxes every quarter. There are due dates: April 15th, June 15th, September 15th, January 15th. These are not optional, these are mandatory. If you don't pay these taxes on every quarter, you will be ending up paying estimated taxes as interest and penalties along with your tax return. The next mistake what I noticed with the business owner is poor record keeping. People don't even manage their books. They think about bookkeeping or finalizing the financials only just to file taxes. It's wrong. You need to maintain and document every expense. You need to record the business purpose. Like example, you are going to a restaurant. You went to a restaurant, you spent money with a business card. You may spend $100. It's a business expense as long as there is a business purpose. You need to write it down why you spend that money, whom you met, what is the objective, why you are spending that $100. On the receipt, you are supposed to write it down as per the IRS rules and record on a real-time basis. Don't think about last year expenses now, because if you're thinking like that, you are not maintaining your books at real-time basis. As long as you are maintaining you're spending the money, you need to take all the receipts proof. You need to maintain the proper documentation, because right now we are in the tax season. Many of our clients, what they try to do is, what we noticed is, they try to go remember, and in the last year April month I spent $1,500. I'm not able to remember what for what purpose. If you are in that criteria, definitely I say that you need to have a proper accounting. Every proper bookkeeping is required. Every month you need to know how much money you are making in the business, how much money you are spending, how much profit you are making from the business. If you are a business owner, you are the captain of the ship. You need to have the control on this. Then IRS, I have increased the number of audits substantially. Earlier, at least in Indian community, what I noticed, many Indians, they work with an accountant just play the numbers, whatever, when they file taxes, they change the numbers to bring down the profits, whatever the client wants. That is not the right process. That's not the right process. There are
हमको घर पे जा रहा था अभी
IRS has
हाँ
been, sorry, yeah, IRS has been auditing high income. If you have more than $400,000 of income, definitely there is a higher risk of audits compared to $100,000 of income. If you have a cryptocurrency investments, there is a risk for audits, higher risk. If you have a 1099 case, that means in your business bank account you are receiving jelly payments, there is those reportings also required. And now AI powered audit selection. IRS is doing audit, picking audit files or files for audit by using an AI technology. Number of audits have gone up substantially, and if you have been adjusting the numbers here and there, stop doing it. It is not worth to do the adjustments. I will tell you, few of my clients, what we noticed when they onboard to us as a client, we have noticed they are using the business debit card, business credit card for their personal things. I asked them, why you're using it? Why you're spending the money for maybe for some shopping or maybe for some personal expenses? They use a business card. Even recently, I noticed one client who recently we onboarded. We noticed when they are reviewing it, even they are using for international travel, family travel, and everything. Even though they are not business related, we asked them, why you are spending this money? Then he said, to save taxes. To save taxes legally, there are so many ways are available. Whatever I am talking right now is only a teaser. Many more opportunities are available. So what I say is, don't compromise on your books. Do a proper reporting. If you need to pay taxes, please pay taxes. If you want to save taxes, legally ways are available. Don't go for shortcuts. Then cost segregations. With the new one big beautiful bill, the opportunity to save taxes have gone up for the real estate investors substantially. If you are a real estate professional, if you are in the real estate investor, you should definitely know about the cost segregation, where we can accelerate the depreciation. Instead of depreciating the property value over 27.5 years or 39 years, you can depreciate a majority of the value of the property in the year one. If you are having a real estate active income, this is one of the great strategy you can implement if you have real estate investments. So definitely there are real estate opportunities are there, and also if you don't do the proper planning, definitely there you might be missing a lot of opportunity. I want to give some example here. A digital marketing company, so who is making around $340,000 of revenue. This is a case study, and also husband and a wife both are taking $130,000 as a salary. So out of 340,000 of income, they are taking $260,000 as a salary, and they are not even optimizing their retirement accounts. When they come towards a tax planning client, what we have done, we analyzed their last year tax returns, identify the gaps what they are missing, and we helped them on lot of areas. Like example, if both are taking $130,000 each as salary, they are paying 15.3% social security taxes on the entire $260,000 husband and wife together. If you can bring it down to the reasonable salary, you can save a lot of money in payroll taxes. And also they have the kids. They can appoint their kids as to help them in the business. They can claim it as an expense. And if they don't have an S corporation, we can even convert it as an S corporation. And also retirement accounts, because they don't have any employees, full-time employees for the digital marketing company, they are eligible for the solo 401k. So, and they can contribute a lot of money, up to $70,000 they can contribute based on their income levels and salaries. So we helped with all those things. Then definitely, then they were able to save more than $30,000 in taxes. This is a real example. That what I'm trying to say, even if you're a small business owner, if you don't have a proper plan, you will be paying a lot of taxes. If you can plan it, it is practically possible to save taxes. Health savings account. If you have a health savings account, you have time till April 15th to contribute up to $8,550. You have time till now to contribute. Retirement accounts. When you are a business owner, you have more options than regular 401k. You can go for SEP IRA, you can go for a solo 401k, you can go for a simple IRA. If they based on how many number of employees you have, whether you want to do the matching or not, whether are you looking for a lowest cost effective product, whether you want to offer a lowest cost effective product you want to offer to your employees, or you want to offer a best tax savings tool you want to offer to your employees. What do you want? There are different tools are available. Each one has a different standards. SEP IRA, you can contribute up to $70,000 if you don't have an employees. Solo 401k can contribute up to $70,000. Simple IRA, you can contribute up to $16,500. These all are on top of your regular 401ks if you have it in your full-time job. And also, of course, there are some limits and threshold limits are there when you combine it together. And IRAs, everyone think that IRAs we are not eligible because we are contributing to the 401k. It's a myth. Everyone is eligible to contribute the IRA, but can we get a tax deduction or not depends on your income levels. So it's very important. You need to understand those things. IRAs, Roth IRA, backdoor Roth IRA, and if your income is more than $245,000, you are eligible for the backdoor Roth IRA, where you need to have a 2 accounts, traditional IRA and Roth IRA. Combine, or you can contribute the traditional IRA, roll it towards the Roth IRA. This is one of the great way to build your wealth. If you have any rollover 401ks, there are a lot of opportunities to convert to the Roth. If anyone has more rollover 401ks from the previous companies, talk to me once. I am happy to guide you. There are so many opportunities are available. And also, Roth is one of the great strategy to build your long-term tax-free wealth. If you have a Roth account, there is no required minimum distributions. You don't need to pay taxes forever in your lifetime if you have accounts in the balance in the Roth IRA account. And if you are 50 years plus, if you are 50 years plus, there is a catch-up contribution you can do. And if you are working for a corporate companies like Amazon, Microsoft, and Oracle, or all major billion-dollar and plus corporate companies, most of them offer mega backdoor Roth IRA, where you can contribute up to $70,000, including your 401ks. There are so many opportunities are available. I want everyone to consider it. And there are so many examples we have where we guide people on saving. You might be doing it in the same way for so many years. Try it differently with proper guidance. Definitely, you can save a lot more money. And so today, overall, what we have covered it. We covered about tax basics. We covered about high level of Obama, the one big beautiful bill changes. We talked about what are the mistakes business owners does, or real estate investors does. We also talk about we are also talk about we are also going to talk about FBAR now. FBAR is a foreign bank account reporting. Which I have been noticing is, as we are first immigrants, we might have bank accounts, fixed deposits, savings accounts in India. If we have any foreign financial accounts, we have a mandatory obligation that we have to file FBAR. So foreign bank account reporting, it is mandatory even though you are on H1B. So if you have any accounts which is totaling to more than $10,000, then definitely you should file FBAR. So FBAR is not an option, it's a mandatory. If you are not yet filed FBAR till now, at least start doing it now. We have a IRS has come up with a new program where you can go back and file your FBAR for the last 6 years. So if you have not yet filed FBAR, so there are a lot of options are available to file for previous years, or at least start from doing that. If you don't file FBAR, lot of penalties. I have been hearing many people are filing a lot of taxes, penalties, because we are not reporting FBAR. And all this whatever we heard for the last 30-40 minutes is a teaser, a lot to learn, a lot of opportunities, but all this can be done only with having a proper team. If you have a right team, definitely who can guide you, advise you, a lot can be done. And we are as AZ FinTax, we are happy to help you either file your taxes. If you are a business owner, we are happy to do a tax planning. We can have a free tax assessment session and we can take it forward. And if you are looking for tax filing services, we are happy to file your taxes also. Yeah. Thank you very much. I have a couple of questions, but Anup, I will leave it to you.
Yeah, thank you, Mr. Anil. Great session. Can you hear me?
Hmm.
Yeah. So like there are a few basic questions. I think you already explained, but still I want to go through again.
Sure.
So what are the major tax law changes for this year?
Okay. As I mentioned, first of all, the major changes you can claim $10,000 interest on your car purchase. Generally, earlier only business owners should be able to do it because there is a business need. Even though you don't have any business, you can claim $10,000 as a car interest. Number one, if you bought any new car last year, and standard deductions if you are higher, if you are 65 years plus, you have a higher tax deductions. There is no taxes on your tips, no taxes on your overtime up to $25,000 each. And you can also and these are the very high level. And also the major one of the big change is salt, state and local taxes. You can claim deduction of up to $40,000, that is your property taxes and the mortgage interest on your primary home. There are limits are there, but up to $40,000 you can claim it as a deduction. These are the very high level. Definitely there is an impact on taxes for because of this.
Got it. So what should I do if I already made a mistake on last year's taxes?
Sorry, if you already.
Made a mistake in last year tax?
Yes, yes, no, no. Okay, you can go back to the last 3 years and amend your tax returns. It is absolutely okay. If you have done any mistakes, you can go and update your tax returns, amend it.
Okay. Yeah. And also, I think you already told it, but is there a minimum balance requirement for FBAR?
Yes, a $10,000 is minimum aggregated. Like example, I have a savings account, I have fixed deposit, I have an LIC policy. All together, if the totaling is more than $10,000 at any point of time, or even one time it crosses, you have to do this reporting now.
So you mean to say we report money in Indian bank accounts?
Yes, yes, foreign financial accounts, not Indian, not American. Yeah.
Okay. So what is the difference between FBAR and FATCA?
Okay, very good question. So FBAR is like FBAR is a report into the Department of FinCEN department. But a FATCA, FATC, a FATCA is a IRS reporting. If you have more than $100,000, you have to report to IRS. If you have more than $10,000, you have to report to the FinCEN. That is a major difference.
Yeah, and this is a little bit of real estate side.
Yes,
So what is a 1031 exchange?
very good question. So whenever you're selling a property, you might incur capital gain taxes. So to defer your capital gain taxes, what IRS is, you can go and reinvest the entire sale proceeds to buy some other similar asset within 180 days. Within 45 days, you have to identify a property. Within 180 days, you have to close the property. So that you don't need to pay taxes. There is no depreciation recapture for now. Everything will be postponed to the future period.
Okay, got it. Thank you. And there are more questions from the participants.
Yes.
So I'll hand over to Pradeep Chandupatla. Pradeep, are you there?
Yeah, thank you. Thank you, Anup. Yeah, I just
Yeah.
consolidated everything. Anil Garu, the first question is that what if we are like having a business or a full-time job employment? Can we allowed to contribute a 70K on a solo 401K?
It's a good question. Yes, technically, if we have a 401k, still you can open a 401k with, sorry, if you have 401k with your employer, still you can open a solo 401k when you have the business. But the total should be maximum of $70,000 in a year per SSN, that is per person. So if you're already contributing $20,000, you can contribute up to $50,000. But again, solo 401k has a different rules. You can contribute up to 25% of the salary from the business what you are taking. So that's what, so you need to do the calculation, employee matching, employee contribution plus 25%, but all together to the maximum of 70,000. You can have 401k and solo 401k for the maximum of $70,000.
Okay, yeah, thank you. The next question we have it is that can we claim for a mortgage loan if your tax filing for most of the tax accountants says that we cannot claim until the actual amount is more than 24K? Is it true?
Answer is yes. Technically, yes. We have two options: standard, itemized. You can claim mortgage interest only if it's itemized. When it is itemized, your property taxes, mortgage interest, and any charitable contributions, not charitable, sorry, yeah, any charitable contributions, all this together exceeds $30,000. That is right now the standard deductions. So then it makes more sense, but otherwise no, then it's not.
Okay. There is a one parallel, I mean, the similar sort of question. If you have is a what is a better way, whether it's an itemized or a standard deduction is better always
Good.
for any candidate.
Always itemized is good as long as you meet the conditions. Like example, for the last year, okay, if you're married filing jointly, up to $31,750, it's a standard deduction. If what are the expenses, whatever I told, mortgage interest, primary mortgage interest and property taxes, and also if there are any state taxes and charitable contribution, all this together, if it exceeds $31,500, then you can go for itemized. Otherwise, you are not eligible.
Oh, I mean, it can, I mean, this, I think we got the same question, okay, in that. So basically, they have something like 100 to 200,000 with them as of itemized. Is it a good idea or not? So
Yes.
going with an itemized ones.
Yeah.
Okay. How is the Roth IRA amount taxed? So if you owe the amount to a non-US citizen, basically he's just moved out of to India and he's a non-citizen, and can we go for a Roth IRA taxed amount?
Can you repeat the question, Pradeep?
How is Roth IRA amount taxed if you move out of US, which is non-citizen?
Understand. Yes, technically Roth IRA is a tax free in America, but if you're in India, you can withdraw this money at the time of retirement and everything, but those all are tax payable. But when you go back to India, I am a chartered accountant from India. So what this is, we have a status called resident but not ordinary resident. When you move there, first 2 years are very, very important. You need to evaluate how to maximize it. So if it's a Roth IRA, anyway you don't need to pay taxes. Whenever you withdraw, you want to withdraw, you can withdraw, and the principal you don't need to pay taxes. So in those cases, those 2 years are very important. You can do some tax planning and you can optimize it. But answering to your question, yes, it is taxable in India when you withdraw.
Okay. I think this was already answered, but we have a following question which says, uh, uh, what in case if you are reporting an bar for a previous year, if you can do so, what is the process? I mean, you already told about the previous year, you can file it, but they're asking for what
So
is the
there is a
process.
process involved. There's a process called streamlined approach. IRS has introduced it where you need to go back and apply it. And if there is a bigger impact, if there is like example, you have a fixed deposit in India, you are not showing in your tax return as an income, then you might need to amend your tax return. It's a separate treatment, and it's complex reporting requirement is there. But we can do it. If you need any help, just send an email to us. We're happy to help you. So, but otherwise, yes, it is possible. There are some different steps IRS recommended.
This question I think is per specific to the AG FinTax. What is like, can you share as a different fee packages you're offering for a file tax with you? If you're taxing with your,
So, sir, so what is the fee you're talking about?
yeah, the what is the fee packages you're offering for a,
Okay, good question, sir. I will tell you how it works with AZ FinTax. So we have a standard pricing structure. Even you can Google search our AZ FinTax pricing menu. You will get the pricing menu. Number one. Number two, our pricing is based on the complexity and number of farms. Like you have multiple homes, multiple investment homes, multiple K1s, multiple W2s. Based on the thing, the pricing will happen. But it's the standard. Everyone follow the same process model. And because our Indian community, a lot of people do window shopping and everything, we charge $200 as a commitment fee when the client onboarded, because what after all working people, sometimes people take it light, so all our efforts are getting wasted. So we want to give our time for the people who are really interested to work with us. We bring the value. When we file taxes, we do a tax planning is also included, basic tax planning is included, financial planning is included, audit supports are included. So these are all things we do, but we want to work with only serious people, not with the window shoppers. So we charge at $200 as a commitment fee when you onboard, but after that we complete all your work. After that we charge our fees based on complexity and number of forms. But if
okay,
you
I
need a
think,
specific price code, you can just reach out to us. We're happy to give a price code.
sure. Thank you, Anil Garu. We have one question where is like, if you have a partnership with LLC, then both can contribute a solo 401k. I think you answered like, for that was only for the loan. This is for the a partnership LLC.
Husband and wife are, if those are the only people, then the answer is yes. If you don't have any outside employees, then you can go for a solo 401k. If you have an outside employees, the rules are different.
Do we get any interest for a Trump account for the
Yes,
newborn babies?
it's
Yeah.
not interest. You can invest in the stock market and the money grows tax deferred.
Okay. We have one more question is that if you are committed with the personal or business expenses and can we get an audit, is there any penalty?
Okay, so when we claim, okay, so I'm sorry, if we combine it, that's what the question is. Sorry.
Yeah, personal and business both to combine.
Okay, there is no penalty, but IRS has a right to reject any deductions if you are claiming, and because of this, if any, or then IRS can flag you that you are combining everything. It's not a big problem, but if any audit happens, then definitely they are creating problem. Why you are using all this? They are making it noise. But if anyone files a case, then court is saying that you are combining your business and personal. You are not separating it. You are combining it both. So you are personally liable to pay any to any court claims. So that's the reason why we say that always separate it.
There is one more question just now came back. So Trump account can open only for a last year baby kids or it can be applied. I think you answered this question for all 18 years below 18 years kids. So I think, and can we open it for a contribute to get any tax benefits for a
Sorry.
newborn baby?
Yeah. Okay. Yes. No, no. I just said up to 18 years you can open, but we can open it only after July 5th, 2026. You need to submit a request when you're filing your taxes. Then you can open it.
I think we have all the questions if anyone has, and we have a minute time. So thank you, Anil Garu, for answering all the questions with patience. So definitely our like attendance would have been very helpful with all your answers provided. Thank you very much for your contribution. Over to you, Anup.
Yeah, I do also have a couple of questions. I will answer those questions. So, what is the best way to reach out to you? It's very simple. I'm just sharing my contact. Okay, so this is my email. You can just send it an email. We take care of, because of the tax season, we have a dedicated customer support team. We take the phones, we ensure that you are onboarding it appropriately. And also for every client, we assign a dedicated account manager and also tax manager, so that a technical person, non-technical person will work with you throughout the year, not only in tax season. After that also, if you receive any notices, IRS audits and everything, we are there. We are not a small boutique firm where we just open only in the season. We are there throughout the year. And once the tax season is over, then we reach out to you asking for tax planning meetings, financial planning meeting, retirement planning meetings. There are different things we do for our clients. But yeah. Okay. So and okay. So and yep. And in the history of our AG FinTechs, we have a zero audits till now. We have clients in many states. We have thousands of clients. We have a zero. That's a quality what we maintain. If you're looking for a quality services, please come. If you're looking for cheap services or very cheap services, then we may not be the right people. So if you're looking for $30, $50 of tax filing, we may not be the right person. But if you're looking for a quality people, genuine person, no audits, completely protected with all these plannings are included in that. So basic plannings are included in this. If you want an advanced planning, we charge extra, but basics are included in this. So then definitely we are happy to help us. Yeah. And I did share my contact. I did share the email ID. You can reach out to us, and we are happy to help. Thank you. Yep.
Thank you, sir.
Okay.
Anup, you want to address anything or as a closure?
Yeah, that's all I have.
Yeah.
Yeah.
Okay.
Okay,
Thank you very
excellent.
much, Mr. Anil.
Yeah,
Thank you very much.
thank you, Anil
Thanks to
Garu.
TTA.
Thank you,
Mhm.
thank you so much for the session, and it's definitely helpful. And thanks to our leadership team, our founder Paila Malareddy Garu, and our president Naveen Reddy Malipeddi, and we have Kavita also, our national leader. And thanks to all the leaders for such an amazing platform. And looking forward to meet you, Anil Garu. So thank you so much, and thanks for this amazing session. And thanks. I know, like, we being part of Arizona chapter, like, I know, like, you have contributed us for our events as well. And thank you so much personally. So because we have a lot of Arizona guys also joining in here. Thanks for your help to the community. Yeah.
Thank you.
Kavita, could you have anything to say?
Yeah, thank you so much, Anil Garu. Thank you, Praveen, Pradeep, and Anup for organizing this meaningful and timely webinar for the people. I'm going to stop live streaming, and as well as good night, Anil Garu. Good night, everyone.
Thank you. Thank you very
Thank
much.
you.
Thanks to the leadership team, and special thanks to my Praveen bro. So and also Anup for all the coordination.
Yes.
Thanks,
Yeah.
Kavita Garu.
Thanks,
Every
Anu, Pradeep. Great
time.
job, guys. Great
Yeah.
job.
Thank you.
Thank you very
Thank
much.
you.
Most
Thank you.
welcome, everyone. Have a